You've had pre-tax profits beating estimates for the second quarter. You've raised your full-year income forecast. You're starting $1 billion share buyback imminently. Can we assume that no more job cuts are to come?
First of all, we're so happy with the results, right? And things are going quite well for Standard Chartered. The Asian markets where we operate are doing relatively well. We hear about the slowness in China, which is true. I mean, the recovery has been sporadic, but fundamentally, the region's opening up. Economic growth is strong, and that's the backdrop for all of our colleagues. We have added thousands of people over the course of the past year. We're also aggressively digitizing our business. So of course that means that people are going and people are coming all the time. But net, this is a growth story.
Let's just hone in on those Asian markets, of course, hugely important for you. You say it's positive. Your CFO said last month that China's property market isn't getting materially better. Since then, of course, there's been lots of public support for the private sector. So are you saying that there is no further pain in Chinese commercial real estate to come? You are seeing improvement.
You know, we took a little bit more pain in the second quarter, so we took some impairments against China real estate. We still have quite a substantial overlay as well, which is sort of saying we've taken a provision against risks that haven't materialized yet, but that we fear might. So we feel very well provided against a little bit further downside. But basically, it feels like things have stabilized, albeit at a lower level. The public support, the government support is picking up. That's encouraging, but it hasn't really lifted the market yet. So we'll see. It'll probably take another 6 to 12 months before we can say, yeah, this market's back on track.
And of course, the other thing that rumbled your sector was the Credit Suisse takeover by UBS. How much are you benefiting in terms of wealth management?
We had really good inflows in terms of net new money in the first half of the year and in the second quarter. Some of that came from Credit Suisse. Some of that is the organic growth that we've been experiencing for years now. Of course, wealth is rising across the Asia, Middle East, and African markets where we operate. So there's a natural growth, and I think we're picking up a bit of market share. Of course, you always have to see how, when things settle out, whether we're really picking up share, but it feels like we are. So the combination of some of the Credit Suisse money diversifying away from now the combined UBS, some ongoing Chinese and other Asian investors just accumulating wealth and wanting to invest it in high-quality international product, and then the general underlying economic trends are all boding well for that business.